Friends, in this video for Ithor Advisor, I am going to talk to you on the topic the government's battle against inflation. A new settlement began with two sets of negative news. First, the rise in GST rates for several items. The second was the government's intervention in export of petroleum products and in import of crude. The government imposed heavy taxes on both sides. Clearly, there is a mixed message on the inflation front. If you take rising GST rates, they will add to the inflation, but the government view is that it would be marginal because those items are not critical items. But hiking duties on petroleum products on both sides, both on the import side and on the export side, clearly means that the government wants to ensure that there is adequate domestic supply of fuel, petroleum products, and also gather as much resource as it can given the widening fiscal deficit. Overall, the government is making decisions which may help it in the short term to tide over its own financial crisis. The markets are clearly not liking this. How many days have you seen a Reliance fall by such a wide margin? We also saw the spillover in ONGC. It's been a very long time since a market bellwether fell so sharply. It did stabilize later, but the message of the market is very clear. The market does not like the government's measures and approaches to tackle inflation and to ensure supply in the domestic market. We saw something similar in metal stocks earlier when export duty was levied on steel and its value chain. One thing is clear, that the government is very determined to battle inflation, but another thing is also equally clear, that the market does not like the measures taken by the government to tighten and control inflation. So, while the government takes tough decisions which may not be liked by the market in the near term, we could see some interesting investment opportunities before us. These opportunities will last till the government reverses the tough measures. Now, that's not going to happen in a week or a month. It will take several months before the government takes back the tough measures. The interim period is certainly a phase when you could consider investments in the affected sectors, in the affected companies, and that investment should be based on the expectation of relief. Overall, one should also keep a close watch on whether these measures are helping inflation. We are seeing several commodities, especially in the agri space, cool off. We are also seeing some of the metals cool off, but this should reflect in the domestic prices. The global prices of many commodities are definitely cooling off. Crude is also showing signs of cooling off, but you never know because overnight something can happen which will spike crude. So, a close watch on all commodities to see if the adverse impact of inflation is on the wane is advised. So, as an investor, keep close watch on all commodity prices. Keep an equally close watch on how government is battling these risks and battling the adversity. Understand whether the government measures will last for too long. If you feel and you are convinced that these measures are not permanent, then when valuation of these companies come into your favor, you could buy some of the affected companies. We did see an FII brokerage come in and give a contra opinion on Reliance, asking people to buy, but it's important for us to be sure whether the companies are actually going to overcome these temporary setbacks and whether the market has overreacted to these setbacks. If you're sure that both these are true, then some contrarian opportunities may exist in this market. We've seen how the sharp cut has actually affected the fundamentals of the metal companies. The market itself has softened, prices have fallen, demand has fallen, people are not willing to inventorize because they are worried what will happen. So that has created a change which is a little bit more than temporary. It may take longer for the changes to reverse. But one can't say the same thing of every sector. Each sector has unique dynamics. So keep watching every sector where the government is taking tough measures to contain inflation. Look at the global factors, compare the two, form an assessment, and based on your assessment, try and participate in some of the opportunities where the setbacks are temporary and a reversal of the measures are likely. That in essence is what we should do in response to the government's efforts to control inflation. The markets are overreacting. They will continue to overreact. It's up to us to react in a measured, cool and calibrated manner to opportunities which get thrown before us thanks to the tough measures of the government. Thank you for watching this video.